On this episode, I share what in the world is PMI. Welcome everyone to this episode of the Ask Jason Gelios show. I'm Jason Gelios, Michigan Realtor. Really appreciate you guys tuning in here. Be sure to like, comment, subscribe, follow on Facebook. On my website, it's allabouttherealestate.com. That's my main hub for all my shows. I really appreciate you guys watching. Somebody was asking me, and this is actually a common question, especially with first-time buyers, and that's, what is PMI? So when they go to get approved, right, the lender, if they need PMI, will say, okay, your PMI is going to be X amount a month. And so oftentimes, like, wait a minute, whoa, what is PMI? And while a lot of lenders do a great job of explaining what it is, I wanted to answer this question in this video. So PMI, or private mortgage insurance, is a lender's protection in the event that you don't pay the loan, right, that you default. If you don't have 20% down on a home, that makes you higher risk to a lender. Now, you may not have the down payment, but you make good money, all this stuff. That's perfectly fine. You can also have excellent credit, but if you're not putting down 20%, right, or if you don't have 20% equity in the home, then you're gonna have to pay PMI. Now, there might be a mortgage out there that goes around that. They're in the lending industry, things are always changing, but I will tell you that most of the time, without 20% down, you have to have PMI or private mortgage insurance. So I wanna dive into a little bit of things. So dive into this a little bit here. It's all about risk when it comes to a lender, right? So I put together some stuff here. I wanna share with you how PMI is paid. Now, unlike homeowners insurance, right, where you could pay just throughout the year or every six months, right? PMI is usually paid monthly, and so there's a formula for it. You want to try to remove that PMI as fast as you can, meaning pay down your mortgage, and either the lender will allow you to remove it, or you will have to do a refinance, right? Because maybe you have more equity in there, 20% plus, and then you can remove it. So sometimes people will do that. Sometimes the lender will allow you to just, okay, not a problem, right? They do, and they send out an appraiser, or they do what's called AVM, I think it is. It's where it's an automated value metric where they look at it and they say, oh, okay, looks like the equity is there roughly. So I want to share with you the cost of PMI to give you an idea. So private mortgage insurance, or PMI, may cost between 0.5 and 1% of the entire mortgage loan amount annually. It can raise the mortgage payment quite a bit, especially when you get up into the higher amounts, right? So I put together an example here. So let's say, for example, you had a 1% PMI fee on a $200,000 loan. That fee would add approximately $2,000 a year, right? $2,000 a year. You have to pay even more. Now, considering that the average listing price of a home, throughout the course of 2018, right? We're halfway through 2019, but last year, 2018, nationally, the average home price listed was about $275. So extra $2,000 a year if you don't have 20% down. That can do the math on $2,000 divided by 12. So lenders require borrowers to pay the PMI. You pay it because you are considered higher risk. Nothing to feel bad about. It's just the way lenders look at borrowers. They don't know you well, right, as far as the underwriter, okay? Your loan officer might have worked with you for years, but ultimately it's the people writing the loan that are gonna look at risk, and it's all numbers to them, by the way. So PMI may cost between 0.5 and 1% of the entire loan amount. Remember that. Lenders require borrowers to pay PMI until you have 20% equity in the home. Now, a home buyer may be able to avoid PMI payments by piggybacking a smaller loan to cover the down payment. For example, if you have another loan that covers the down payment, right? The first lien is, let's say, 80%, right? So 80% loan to value, meaning you do a loan for 80% of your home, and then you have a little loan over here that covers, your down payment or the rest. Before the recession, there were loans, and actually they're probably still out there, but they're not as common. I know this, where, before the Great Recession, right, there were what's called 80-20 loans, where you would have two loans on your home. The second one was not really a home equity, but it was a second loan. So you would do an 80% loan here, right? So you avoid PMI, private mortgage insurance, and then you do a 20% loan here, or some people were doing a 10% loan and putting 10% down. But those two loans is separated, and so the lender said, oh, okay, less risk, right? Because you don't have everything tied with one lender. So that was going on a lot. Wasn't a horrible thing, but it was a way to avoid PMI. To cancel PMI, again, it's really simple, but it's not easy, right? You have to have 20% equity in your home, meaning you have to pay down your mortgage or the value goes up, right? So a lot of people were purchasing homes and then the value jumped up, and so they were able to do a refinance, and then therefore they had at least 20% in their property, which meant that they could refinance the loan and get rid of PMI. But I've only heard of a small amount of lenders allowing you to just keep the loan the way it is at the rate that you have and just do a quick appraisal or an automated value metric, and then basically removing PMI if it's there. But most of the time, especially these days, lenders want you to just do a refinance, which is kind of a pain because it will cost you, right, some fees to get the refinance done. However, you can save a good amount. Just like our example that I shared earlier, on a $200,000 home, it could potentially cost you $2,000 a year. So if it costs you, a couple grand or less to refinance, right? Sometimes it costs less, especially if you can keep it with the same lender. That tends to help, unless you're not a fan of the lender that you went through. But ultimately, it's about numbers, and so that's one way to get rid of PMI. And then the other way would be, again, if the lender allows you to just remove it, right? Because you've been a long-time customer or whatnot, but that's rare. So in a nutshell, that's what PMI is and how you can cancel it out and why lenders charge it. So really appreciate you guys tuning in to this episode. Again, be sure to follow me on social media. Put the link right, the little icons right here. And my main hub it's all about therealestate.com. Definitely, if you don't subscribe to my e-newsletter, you should. It's valuable tips. I share some of these videos on there as well, the latest videos, and some articles that are helpful, whether you're a home buyer, home seller, or a home owner. I share tips on maintenance and all that fun stuff. So I'm Jason Gelios, Michigan Realtor, and make it a great week.